The Minority Market. Episode 37. What is a trading system and why it matters? Most people enter the market with hope, not with a system. They rely on feelings, tips, random strategies, and short-term excitement. Sometimes they win, sometimes they lose, and over time confusion grows. Without structure, the market becomes emotional chaos. A trading system is what transforms random actions into repeatable behavior. It is not about predicting the market. It is about creating consistency in your decisions. A trading system is simply a set of predefined rules that guide how you enter, manage, and exit trades. It tells you when to act and when to stay out. It removes guesswork and emotional reactions. Without a system, every decision feels new and stressful. With a system, decisions become procedural and calm. Beginners often believe a system is a complicated formula or a secret strategy. This is wrong. A system is not magic. It is discipline written into rules. It defines your market approach, risk tolerance, time frame preference, and behavioral boundaries. The power of a system does not come from complexity. It comes from consistency. When you trade without a system, emotions dominate. Fear makes you exit early. Greed makes you hold too long. Impatience makes you enter too soon. Revenge makes you overtrade. A system creates distance between emotion and action. It acts like a filter that protects you from yourself. Another important role of a trading system is expectation management. Without rules, traders expect perfection. They expect every trade to win. When losses happen, frustration builds. A system helps you understand that losses are part of the process. It shifts focus from individual outcomes to long-term performance. A system also improves decision speed and clarity. When conditions match your rules, you act. When they do not, you wait. There is no debate. There is no hesitation. This clarity reduces mental fatigue and emotional exhaustion. Many beginners jump between strategies because they lack structure. One day, they trade breakouts. Next day, they try indicators. Then they switch to news-based trading. This constant switching prevents skill development. The minority commits to one approach and builds mastery through repetition. Another benefit of a trading system is performance tracking. When you follow rules, you can measure results objectively. You can see what works and what is not. Without rules, performance analysis becomes meaningless because decisions are inconsistent. A system also helps you control risk. It defines how much you risk per trade, where you exit when wrong, and how you manage open positions. Risk control is not optional. It is the foundation of survival. Many traders fail not because of bad strategies, but because of poor risk management. It is also important to understand that a trading system must match your personality. Some people prefer fast trades. Some prefer slow investing. Some can handle frequent decisions. Some prefer patience. A system that conflicts with your nature creates stress and inconsistency. The minority builds systems that align with their temperament. Another misconception is that systems remove flexibility. In reality, systems create structured flexibility. They allow you to adapt while staying disciplined. Rules guide behavior, not imprison it. You must also understand that no system wins all the time. Every system experiences losing streaks. Beginners abandon systems during drawdowns. The minority understands probability. They stay consistent and allow the edge to play out over time. A system also protects you from external noise. News, opinions, social media, and market predictions constantly try to influence your decisions. When you have rules, external noise loses power. You focus on your process instead of reacting to headlines. Building a system does not require complexity. Start simple. Define what market conditions you prefer. Define how you enter. Define how you exit. Define how much you risk. Define when you do nothing. These 5 elements create structure. Another important aspect is execution discipline. A system only works if you follow it. Writing rules is easy. Following them during emotional moments is hard. This is where mindset training becomes critical. The minority practices discipline daily, not occasionally. You should also understand that systems evolve. As you gain experience, you refine rules. You improve risk management. You adjust parameters. This evolution is based on data and observation, not emotion. Here is a simple exercise. Write down your current decision process. How do you enter trades? How do you exit? How do you manage risk? If your answers are unclear or emotional, you do not have a system yet. Awareness is the first step. Another exercise is back review. Look at past trades and identify patterns. Where did you lose money? Where did you succeed? What behavior repeats? This analysis helps you build structured rules. The biggest advantage of a trading system is psychological stability. When you trust your process, you stop panicking during losses and stop overreacting during wins. You become process-driven instead of outcome-driven. The minority does not seek excitement. They seek consistency. They do not chase trades. They execute plans. They do not blame the market. They improve their system. Remember, the market rewards discipline more than intelligence. Many smart people fail because they lack structure. Many average thinkers succeed because they follow rules consistently. Your goal is not to create the perfect system. Your goal is to create a usable, repeatable, and disciplined process that you can follow even during emotional pressure. When you build and follow a system, you stop gambling and start operating. You move from randomness to structure. You move from emotion to discipline. You move closer to the minority mindset. This is why a trading system matters. It is not a tool. It is a foundation. And without a foundation, nothing in the market lasts.